ICGI, an update from accounting to accountability. Podcast episode number 97, a journey from accounting to accountability, cowrie shells to cryptocurrency. Corporate MOM, Corporate Management Orbiter Mission. Establish ICGI, Institute of Corporate Governance of India. It's a journey from accounting to accountability. This executive summary is for accounting. The destination accountability, we are on the way. Accounting part of it, I have given 7 episodes. And this is a summary of it. And before that, I would like to give the information that there was a conference, Athena Alliance, Global Competition and Collaboration, in which I note here, it says in the conference paper, proposal paper says, in fact, it is not clear that the so-called gap standard is even particularly meaningful anymore. Companies continue to search for beneficial ways in which to disclose information about themselves with or without formal sanction. That was the proposal from Global Competition and Collaboration in 2011. Now, they want freedom of enterprise. Now, these 7 episodes, this is a summary. Number 1, we can unlearn. Industry pressure on accounting profession and the government. We draw a parallel to a college student who refuses to study unless his demands of comfort given first. Now, you can take a look at that global competition and collaboration. They want, with or without formal sanction, they want the freedom of enterprise. Number 2, we can learn historical examples from Marco Polo that are the illustration of the importance of trust, honor, and good governance in business and society, practiced in India in the 12th century. Number 3, we can learn from Chitragupta, the foremost known accountant who records people's action, suggesting a shift towards greater accountability in modern accounting practices. Number 4, way forward. Project Chitragupta. AI is a reactive mission, objective and logical. Accountability is illogical, subjective and paradoxical. HI shall enable AI to understand HI. Finally, I shall give you the ICGI parameters scientifically, physics, quantum physics and metaphysics via YouTube shorts. My mission is to establish the Institute of Corporate Governance of India. Why do we need that? Why do we need that is a good question, because why else DOGE is there in United States, US side, you have any number of rules all that. But we are not able to find out to justify the conduct of the people who have been entrusted with everything. So that's the reason why. The rules express the truth and justify the conduct. That is the ethics. That ethics is the outcome of ethics is a knowledge base. The knowledge base of who conducts, how individuals conduct themselves in a company or the government is the most important factor. That is what is being needed. That is the need. That is how it is being found out from ICGI, establishing ICGI based on science. Why do we need ICGI? Rules express the truth and justify the conduct. Rules are accounting. Justifying the conduct is accountability. So we are on a journey from accounting toward accountability. We have not yet reached the destination, accountability. That's why we need ICGI, Institute of Corporate Governance of India. Let me take what Thor Heyerdahl, he wrote a nice book on Maldive mystery. In Maldive mystery, he says cowrie shells were in plenty. There were 1,200 islands, 187 inhabitable, and main trading was, it wasn't before the 12th century what it was, before it became an Islamic nation. The cowrie shell was the medium of exchange currency from Sweden to Southeast Asia. But that's the one which they had used, which they have found in Sweden also, cowrie shells from Surat to Chittagong. Very many, particularly on the eastern side of the India, the Dutch and the Sri Lankans, everybody used the cowrie shells. So the Gumasta of cowrie shells was ruling the world trade, because the World Trade Center was India right through for several centuries. Now, Warren Hastings came out with a copper coin. Then in 1830, also, it says that he could not displace the cowrie shells. It continued with cowrie shells. Only by the beginning of the World War I, cowrie shells came to naught. And then our currencies have come into the picture. If you look at the modern accounting, a shopkeeper with a cash book and the shopkeeper or cowrie shells gumasta, and today's gumasta for a small shopkeeper. The small shopkeeper extended the accounting, because as and when it grew from a small shop to Reliance or Adani, that columnar from vice president of this and vice president of that and vice president of so many all came out, but they're all transactional. All these are all accounting as it was before, 2000 years before. So the modern CFO is as good as the Gumasta of 2000 years back. Accounting had remained the same. Why do we need ICGI? Why do we need AI? Have you ever questioned that? And all these AI hubbub? I'll give you a small example. A fellow employed a big giant. Lorry loads of potatoes were there, and he asked them to, before I come back for lunch, you put everything in baskets and put it in the godown. Before he came, in no time he did it. He was a giant. Second day the same thing happened, and the third day he was wondering what to do, how to make use of this fellow, the giant. He said, potatoes, before you put it in the basket, these are the various baskets. In one basket you put it the big ones, and this basket you put it the small ones. Okay? He goes to the office, comes back for lunch. Nothing was done. Putting the potatoes in total is quantitative. That is AI. Putting these, differentiating between the big and small, the value between one and the other is different. That is ICGI. I'll give you another example to reinforce what I'm talking about. In Ibn Battuta, who came and one of the greatest travelers of the world, he came to India. He was there in as Tughlaq's, he appointed him as a magistrate. Tughlaq drama, which Chose Ramsamy had conducted. He says, is one of the drama, this thing is that Tughlaq asks, Battuta, what do you think of my great idea of coming out with the leather coins? Battuta says, it's a great, brilliant idea, Sultan. And anybody who had a pair of chappals had become a multimillionaire. This is what happened with P. Chidambaram. The fellow sold an Indian currency mint to Pakistanis. Shiploads of currencies came. Marco Polo, who also came around. He came to India. He was there in Pondian Kingdom, and he was mentioning, it's an amazing, he says, the governance prospects of Pondian King at that point in time is par excellence. He says, anybody who, there is no need for a contract. If any merchant, you give a word of honor that they will deliver. And that was the time, that is sustainability of value. So that is the difference between AI and HI. AI is quantitative, HI is qualitative. To have the sustainability of value system, to break the flows like P. Chidambaram, we got to have ICGI, the Institute of Corporate Governance of India. That alone will do. Why do we need ICGI, the Institute of Corporate Governance of India? Let me give a small example as far as the accounting is concerned. We have a savings bank account. The bank provides you with a passbook. So the entries are available. We know what the passbook balance is at any time. Now at any time, but previously it took a long time to prepare a passbook and give it to you. So leave it here, I'll give it to you later. Bank employees resisted the introduction of computers. It took a very long time, years, for the fear of the unknown, whether they would lose their jobs. But it had come today. Your interest being credited, which is non-transactional, instantly. On 31st March, if it does, every 3 months, it gets credited your account instantly, and you are able to see it instantly. Any of your transaction, whether a deposit or expense being sent, GPay that you pay, so is available instantly. So the fear that the bank employees had disappeared once the computer had come into the way, which facilitated more number of work to come in. So that fear of the unknown is always there, as it is today with AI. AI is dealing with people who are educated, well qualified. They are afraid whether AI will come and displace them. I don't think it is possible. For a simple reason, there is more available time factor that is being brought in, and it will be to the goodness of all such employees who feel the fear of the unknown. What will happen? AI will develop to such an extent of taking care of the basic data of transactions. So you are relieved of this accounting aspect of it, and you start looking at the accountability aspect of it. That is the most important thing that we are taking this journey. In accountability, if you look at it, the best accountant in the world that we are aware of is Chitragupta. What does he account for? Everything. He accounts for the accountability. We are moving towards that. We are in the process of identifying a journey from accounting to accountability. Trial balance, tallying the trial balance, all transactional, no issues. Except in some cases like, closing stock valuation, which comes and affects them, it becomes open stock next ensuing year. So it is being adjusted, even though the over value gets adjusted in the next year. It has been practiced. But what has been a problem? That was in 1985 onwards. The industry was looking at the research and development costs. There was a thing called the IAS 9. And they wanted the capitalization of that had been a major problem. It was not coming through. And there is one thing in 1998 which gave opportunity for these guys to, they came out of the IAS study called Intangible Assets. Intangible assets is defined as an asset with a non-monetary asset without physical substance. Super. This is like a closing stock when you do the valuation. Here you go to your go down and show to them your non-monetary asset without physical substance. Anybody who had taken with them a child would have whispered, the king has no clothes. The way in which it has been done, the intangible assets, $4.1 trillion had been not included in the United States statistics of intangibles, these intangible assets. Even today it continues. That bringing that, publishing that IAS 38 intangible assets is the number one problem for the auditors. They won't be able to do that. And even today it continues. SVB and FDX and all that is the same problem. When we do that, the responsibility for making the auditors is very difficult, so long it exists. And more difficult is the opportunity that was given to the open platform to the industrialists and the big companies. They can do anything wrong. You look at M&M, you look at Reliance, you look at big companies. Each one has got the intangible asset of nearly about 10,000 crores. If you look at the whole India, it could be billions of dollars. So this is an important aspect which auditors can do nothing. But who can do that? Is ICGI, the Institute of Corporate Governance of India. Why do we need ICGI, Institute of Corporate Governance of India? We are on a journey from accounting to accountability. In 1985, there were two different cases. One is very heavy R&D expenditure by very many industries, which they wanted to capitalize it. And they were strict about it. IAS 9 had certain specific requirements. Until the project is completed, they can't capitalize it. So that was a problem. And another types of companies started coming was capitalization of brand value. Actually, IAS 38 intangible came to the rescue of these guys, brand value fellows. They started doing anything they wanted in terms of capitalizing, as we said, a monetary asset without any physical presence. So that sort of a thing when it happened, it gone completely haywire. Auditors could not do anything about it. What happens in like around multiplication and addition, both are same. 828 is multiplication. 64, when it comes addition, you add 64 times. That's what the computer does. Similarly, there is one benchmark being given, one below 1 year and above 1 year. Within 1 year, we call it as a profit and loss account for the current year. And profit comes out of that. Then anything that could be capitalized, go to the second year onwards, any number of years, like no machinery or purchase of a building and other things and all that. Is capital assets, fixed assets. And depreciation used to come to the P&L account. That's what it was. But after this IAS 98, in 2000, AOL brought that intangible assets, the valuation of $335 billion. So in finance, $335 billion of intangible assets were very visible in the balance sheet, and the fixed assets were not. But there was a big problem with the your P&L. You can have a big growth capitalizing things which cannot be capitalized, and you have to show the profits. That is how the stock market looks into it. It was not done. Like that, another company called WorldCom, they lost about $11 billion trying to show more profits. That is a major problem. Auditors lost control. We will look into it, why ICGA is important. Where are the why there's a need for ICGI, Institute of Corporate Governance of India? I just came to visit my house here in Kondanpatti, good village. It's a hamlet. When we look at that accounting to accountability and how accounting has come came around 2000 years back and now, as we said, if you stick only to the transactions and nothing more to be talked about, done well. But when non-transactional items had been brought about, then it becomes a major problem, which we are not ready to handle. We have not handled it over the last several decades. That's a major problem. If you look at the manufacturing side, any area, any industry, like Deming Award, and you have TQM, you have a lot of things which had been happening now in the industrial area, in computer area, in AI, development in all these manufacturing and even agriculture, I must say, quite a lot of improvement that had come about. And services sector, everywhere there has been a lot of improvement. But the most important thing for any company is the management. The management had opposed it. They didn't want any control over, like a regulatory and all that. We don't want any control. If given a chance, there's no need for a balance sheet to be filed. Nobody is interested in filing the balance sheet. But that is the most important. And the development in the accounting area is not that there was development. In fact, it was going down from 1985 onwards. And today we are stuck up with, like IAS 38, intangible assets. And this is a major problem for us. And knowing that they are handling only the transactions, nothing more than that, the CFO of modern area is confined to very difficult way of analyzing with your current ratio or this ratio or that ratio without any improvement. And that is what is needed. ICGI has to come about. With these 7 episodes, let me conclude accounting aspects of our journey toward accountability. I elaborated how accounting has not kept pace with advancements in other industries, particularly in handling non-transactional items. IAS 38 intangible assets, no doubt, is the most damning non-transactional item, a non-monetary asset without a physical substance. But there are others too, such as insider trading. More than 296 such qualitative items exist in an organization that are non-transactional. By removing SEA's version of intangible assets, accounting shall deal with mainly on transactions. It shall fortify accounting body without showing concession to any other body. Intangible assets standard be replaced with the earlier version of capitalization of research and development costs. Accounting profession will be secured. Non-transactional items are very many, such as code of conduct, whistleblowers policy, women empowerment, etc. Nearly 296 of them, and we would keep counting more and more. If you include 17 SDGs, economic development, social development, as well as the environmental development. These goals are very, very important. Accounting standards will not be able to handle them, and hence an independent ICGI, the Institute of Corporate Governance of India, by an act of parliament is very much warranted. My IPR IBCM, Inactivity Based Cost Management. We are on the way forward with IBCM to bring accountability. The main theme is construct values and deconstruct what is the valueless. An activity has a cost incidence, whereas an activity has a cost consequence. Measure cost consequence now, now, now. That's the main theme. Measuring cost consequence when there is an activity is prevailing is the most important thing. Inactivity based cost management functions on the following 5 principles. Principle number 1, what gets measured gets managed. Principle number 2, measure qualitative elements of management. Principle number 3, corporate atomic structure. Principle number 4, a return on the intangible. Principle number 5, emergent property phenomenon. We are in the cowrie shells to cryptocurrencies. Cowrie shells for the last 2000 years are with us. It continue to be with us. The method of accounting is the same, no change. But cryptocurrency have come and so many things are happening, but we have not got a system of governance. Governance due diligence is the most important aspect of every transaction, every decision making, I would rather say, whether it is from the deal room or for any other like M&A, P and whatnot, and including running a company. That is very important. That is where I come into the picture. This governance, as well as governance duty, subject-object self-governance due diligence is one of the exceptional IPR ever being created for running your management operating system. There is no exception. For example, the two most important things are metrics and the benchmarks. The metrics are something amazing. It is everlasting. When I say everlasting, as far as the planet Earth is concerned, if Elon Musk is going to take all of us to Mars, that metrics will change. Okay? And as far as the benchmarks are concerned, it is same all over the universe. It's the same thing. So this being applied as a matter of science for getting the SYS governance due diligence done, the reason why I have come to Mumbai is to establish a franchisee system. I'm discussing with my auditors where we can have the franchisee for this governance duty, direct clients, and the franchisee being given, which they can help the MSMEs particularly. This is my intention. What will happen is that when you have one of the finest copyrighted thing, which cannot be a challenge. It can never be, it will remain unchallenged forever. That's why it has got the, forever metrics and benchmarks. Will guide the MSMEs particularly. The big people, big companies, they're crazy guys. They're gone for all these big PwC and EY and this and that. But I would like to talk to directly for someone like Byju's. They have been taken for a ride. I like to help them out, assist them, and also consult with EY and other people. We got to change our organization structure. If you are going to run your organization only with a debit credit, we can never improve. There will be no growth at all. You are not able to find out the relationship between one and the other. What we have to do is to bring in something totally different from two-dimensional flat structure to three-dimensional structure. This is what Einstein said, how the universe does, is in terms of most incomprehensible thing about the universe is that it is quite comprehensible. Make your company comprehensible by giving the atomic structure. That is the one which makes it good for the universe. The same thing apply to corporate atomic structure. When you have the corporate atomic structure, you have the three things as the atomic structure. Is proton, electron, and neutron. A proton is 1837 times the mass of electron. So it holds the power on the electron. And neutron do not influence the atom, but it adds mass to it. The mass of neutron is as good as or even better than the proton. And these two fellows, protons and neutrons, combine and create a nucleus. The nucleus is very strong. You can imagine 1837 plus 2000 is more than that of the electron. So electron spins around the nucleus. Now electron spins around the nucleus in nearly about 75 3/4 of the speed of light. You can imagine the strength of this nucleus. It just spins around. If the nucleus is not strong enough, you have a problem. It will go astray. Electron is your CO1 workforce. Proton is your board of directors. Neutron is your society. That is a corporate atomic structure. When you are aligned with the society, particularly the board of directors or the policy making decision makers of that, today you are the board of directors today, 100 years since somebody else would be there, the same board is there as we have with Tatas and all that. So this is the most important thing, board of directors and the society. Combine that. Then CEO, anybody can come. Yeah, Jack Welch can come and do anything he wants, but he has to spin around that nucleus. If he goes astray, as he had done, we have a problem. We have several problems. Take it.